Welcome to the Ronel Talks Money Show. Now, today we are fortunate to have Sidney McKinnon with us from Cadiz Asset Management. And for those of you who would know, is that Cadiz is having some of the best performing money market funds in South Africa already for many years. And we have Sidney, who is really the man behind the scenes today. So Sidney is a senior fixed income portfolio manager South Africa and the portfolio manager for Cadiz BCI Money Market Fund. Now, just a little bit more about Cadiz. Cadiz's asset management was established in 1996. They are a fund manager that manages fixed income, multi-asset and equity funds on behalf of its institutional and individual clients, and they were acquired by Spirit Invest in 2018. Now, Sidney, thanks a lot for joining us today.
It's my pleasure, Ronel, and I really look forward to our little talk today.
Yes, I think this is such a vital topic. I think especially during these times where things like cash flow and emergency funds and those type of things, really we have emphasized the importance of having those kind of concepts. And I think a money market goes hand in hand with those kind of concepts. But before we go into a bit more detail, maybe you can just explain to us in layman's terms, what is a money market fund all about?
Thanks, Ronel. I think it's quite an interesting question, because I'd like to make a distinction between money market and money market funds, or money market investments and money market funds. So, when you talk about the money market or money market investments, you refer to quite a range of investment instruments, anything from cash and cash equivalent type of instruments. So that's really your money market realm. You're talking cash deposits, maybe fixed deposits or term deposits. You've got all these things, notice deposits. And then in certain instances, you've got more sophisticated money market investments that is not always accessible to the layman or the ordinary man in the street, but it's accessible through maybe something called a money market fund. And here we're talking things like negotiable certificates of deposits, treasury bills, all of those fancy things. But generally, the money market investments are investments that you can access that are cash and cash equivalent type of investments. Now, a money market fund, on the other hand, makes use of all of those instruments. So you as an investor can get access to that kind of investments. It's largely instruments that are issued by the banks and the like, but funds are administered and managed by your fund managers.
And then you should maybe just, you've mentioned now your typical kind of savings account, notice deposits, fixed deposits. What's the main difference between those and your money market?
Ronel, I think that's quite important to understand. But before I get there, I think there's just another term that I think we need to maybe just shed a bit of light on, because this whole area of money market and money market funds and fixed income portfolios all kind of gets mixed into each other. So, you've got, on the one hand, you've got, as I explained, the money market instruments or vehicles that you can invest in. You've got a fund, and then you've also got this fixed income investments or fixed interest type of portfolios, which is anything from money market all the way up to more sophisticated instruments like bonds and the rest. So, if today, let's focus on the money market side of things, and the difference between a money market instrument or a money market investment and your standard savings account or notice deposits or whatever the case may be, is really in the way in which it is put together. I can walk into a bank today and open up a savings account. I'll be participating in the money market because a savings account is a type of money market. I can go and do a fixed deposit investment and lock my money away for 6 months. I'll be investing in the money market, but on a term basis. However, the difference is when you are investing in a particular fund, you can then access all those instruments simultaneously. If I've got a savings account, I can add into my account and I can withdraw from my account quite easily. If it's a fixed deposit, I might have to wait for a period of 6 or 12 months to get my money back. But if I'm investing in a fund, I've got the access to all of those instruments as a collective. And that's why you hear this term called collective investment schemes, or more commonly known as unit trust. So an investor can invest in units in that scheme or in that trust, and therefore the investor then enjoys the exposure to all of those instruments all at one go. So, you know, in short, you can have a savings account at a bank, which gives you access to the money market. You can be invested in deposits or term or fixed deposits, but then remember, you've got to wait until the term is over. If you don't, there might be penalties involved. Or you can invest in a fund, which gives you access to all of those instruments simultaneously. And I'm sure a little later on we'll talk about the unit trust funds and how they operate and how you own units and sell and buy units. But then you will enjoy the opportunity to be invested in all the different types of money market funds, money market instruments through a fund.
Okay, and then now that you're all mentioning it, in terms of a unit trust, I know like a money market is classified as one of your unit trust classifications or types. But maybe you can just, because there's sometimes quite a bit of debate, is it a unit trust, is it not a unit trust? And I think there is like in quite a differentiation between your money market and most of your other unit trust classifications. So maybe you can just explain that to us a bit better.
Okay, Ronel, when you're talking money market unit trust funds or collective investments, it's a unit trust. It's governed by, like all other unit trusts, it's governed by the Collective Investment Schemes Control Act, and it's got to abide by the regulatory requirements for unit trusts as a whole. And then even more so specifically, the Act specifically has got parameters around which your money market funds have to operate in. The biggest difference, in my opinion, between your money market funds and other unit trust funds is the risk. Your money market funds effectively are funds which are at the lowest end of the risk spectrum. So they participate in instruments or investments that are on the lower end of your risk spectrum, cash and fixed deposits and negotiable certificates of deposit, etc. Those are at the lower end. So a money market fund is precluded by legislation, such as the Collective Investment Schemes Control Act, from investing in more riskier assets, like your equities or potentially derivatives of certain sorts or property or whatever the case may be. So your money market funds are generally focused on the low end of the risk spectrum. The other big difference, I think, that one has got to bear in mind is that, and these go for all unit trusts, that there's no guarantees. It's not a guaranteed fund. That guaranteed funds are given by, or you can access potentially through a bank or through a life insurer. But unit trust funds are not guaranteed funds. There is an element of risk involved, but on the other end, there's lots of advantages of being invested in a unit trust fund, and I'm sure we'll chat about that a little bit later. The big difference is between a money market fund as a unit trust and another unit trust, such as an equity fund, is the risk. Your money market fund is concentrated on the lower end of the risk spectrum with low variability of returns. So I hope that explains that, Ronel.
Yeah, no, absolutely it does. And then you should maybe also just touch on the fact that the unit price is always equal to R1, and that it doesn't vary like with any other unit trust types.
Yes, it's just something that has been specified for money market funds. So what happens is that a money market fund accumulates interest on a monthly basis by nature of the investments that this pool of investments is involved in. That all that interest that gets generated for the month, we are obliged to pay that out to the unit holders. So, for example, if the fund is worth R100, I'm just making it very simple, and at the end of the month it earns R1 interest, that R1 has to be paid out to the unit holders as distribution. Now, which makes the value of the fund once again 100 or R100, and that's the concept to be as in terms of the price always being at 100. Most unit holders don't take the R1 every month. They actually allow that R1 to be reinvested in the fund. And that's why you would see, the fund growing and the unit price always being at 100, always being at 1, is because all the interest needs to be paid out. Unit holders investors have the option of either taking it or putting it back in the fund. Most unit holders or most investors reinvest it back in the fund.
And then if your unit price is always equal to R1 and now your interest accumulates, can it ever happen that you lose money in a money market fund, or that all of a sudden your balance is lower than what you've put in? Can it happen?
Ronel, very, very unlikely that it would happen. As I said previously, no funds are guaranteed. But unit trusts, money market funds have been designed in such fashion that you would retain your capital. As I said, there's no absolute guarantees. It's extreme cases where you would have things like huge, what they call credit defaults, like banks start for, let's say, for example, all our major banks fall over. Then there is a possibility that the banks cannot come good with the interest payment, and then there's a potential, but the likelihood of that happening is very, very small. So in essence, there's no physical formal guarantee, and it's wrong to say that, but there's kind of implicit guarantee that your capital remains protected.
Yeah, so then it is safe to say that it is a relative safe investment.
Absolutely, I can agree that it is a safe haven, especially in times of market volatility. But anything in life, there's this whole thing about the risk and reward. So the more you are prepared to risk, the greater potentially your reward. But if you need to or want to remain conservative, your reward is normally less, but then you get the benefit of conservatism and retaining capital, I most certainly don't like to think of my job as gambling in any way and betting in any way. It's really a lot more sophisticated than that. But what do we do is we are risk managers. We're looking at the risk on a daily basis to ensure that what our clients give us in terms of the mandate, in terms of the expectation, can be met.
Yeah, and I think 2020 really taught us that absolutely anything can happen. So never say never. But maybe just tell us a bit about the pros and the cons of a money market fund.
Yes, Ronel, I think there's probably more pros than cons, but try and lay that out for you. I think, first of all, your money market funds are excellent vehicles to invest your cash or your cash surplus cash in times of market volatility. So it gives you that safe haven where you can put your nest egg or your savings into a money market fund, be very reasonably assured that you'll have preservation of your capital, that you'll get interest growth, a measure of preservation of your future purchasing power. And so I think, in my opinion, that is advantage number one, or pro number one. You can put your money in a safe place during times of market volatility. And you see that 2020 has been a point in case where we've had huge volatility. And then the advantage or pro is that it's an excellent place to keep your money safe while you're contemplating the decision to perhaps go into a more riskier investment, or whether I have to buy a property, or I need to have a disbursement of funds or an expense in the future. It gives you an opportunity to safely park your money, for want of a better word, in an environment that is relatively secure. I cannot use the word guaranteed, but secure in terms of your investments. And now, I think the other big advantage of money market funds, and this is fairly true for most unit trusts, is that it offers high levels of what is known as liquidity. In other words, I can get in and out of this thing very quickly and easily. Nowadays, we got to move with the times. Things are all electronic and digital. It's as easy as a couple of mouse clicks, and you can invest and you can disinvest your money very quickly. So I think those are the major pros or advantages of being in a money market fund. Easy access to your money, excellent vehicle during times of volatility, market volatility, and a very safe place to park your money should you be contemplating, right, what is my next move? However, that's the upside. If there is any disadvantages, I think probably the biggest one would be when rates are declining. So money markets funds in particular, money markets are explicitly linked to interest rates. And we saw, as a matter of fact, very recently or yesterday, the Reserve Bank governor said we're not changing rates this time around, but money market funds are inextricably linked, my apologies, to interest rates. So if we are in a rate cutting cycle like we saw in 2020, and I'm talking about the disadvantages of a money market fund now, you're going to be earning less because rates are coming down. Now, if you consider that a disadvantage, then it is. When the rate cycle changes and it starts going up again, you start earning more. As much as on the other end, if you own a mortgage, you're very happy to be paying less on your mortgage because the rates are coming down. If you are in a savings or an investment vehicle like a money market fund, you're going to be earning less interest as well. But having said that, I think that's probably the only con I can think of that's material enough to mention. Most money market funds are giving you returns that are at least commensurate with inflation. The dangers of obviously always if interest rates should drop below inflation, then you're not earning enough to keep your future purchasing power alive. But I've been around this block for a good many years, and I think most money market funds are at least going to keep pace with inflation at the very least.
And then I use my money market, I would say, for both short-term as well as long-term investment purposes. But from your point of view, would you say it's more of a short-term or a longer-term investment, or can you use it for both?
Ronel, every investor, and I think you hit the nail on the head, every investor has a different investment horizon. So I might be saving for a holiday at the end of the year, if you can go on holiday during this time, or I might be saving for my kids' education in 15 years' time, or buying a car, or I'm getting married, or whatever the case may be. No freelancers in this world. So everybody's got a different time horizon. I think the beauty of a money market fund is that generally you're going to be receiving returns that are a little bit in excess of cash, and you've got that liquidity to get in and out as quickly and as efficiently as you particularly want to. It's very suited to a short-term investment. I need to park my money somewhere because I'm going to be going on a big holiday in a year's time. It's a very suitable investment. But also, if my kids are going to be going to university in 15 years' time, part of my investment can very well be used in a money market fund that's got low variability of returns, and that can provide me with a safe environment to park my money on.
And then you've said now there's always a component of risk, even though the risk for money market is quite low. But from your point of view, from like a portfolio management point of view, what are the risks that you are typically looking out for?
Okay, now, Ronel, any investment has risk. I mean, we use the term a little bit loosely, but any investment has risk. Now, from a money market perspective, the biggest is interest rate risk. So, and I think I articulated some of that earlier on. If interest rates are coming down, you earn less, so the risk of earning less on your money is always there. But conversely, if interest rates go up, then you earn more on your investment. So there's interest rate risk in terms of volatility of interest rates. And that is always the biggest risk associated with money market funds. The other kind of risk inherent in money market funds, and I may have alluded to, but to a much lesser degree, is what we call credit or default risk. So that's what I was saying earlier on. Some of the banks fall over, and the fund, or you invested in the banks, and now you've got to struggle to get your money out of them. And it's happened before. It's happened. We don't have to think back too long, or unless I've just been in this game for far too long. But there have been a few banks that have fallen on their backs, and fortunately, I think, and this is the beauty of being invested in a fund as opposed to just going to knock on a bank's door and actually taking your investment. In a fund, you get diversification, so you get this whole array of being invested in different products at different institutions. And therefore, if one of them do fall over, and that's why I'm saying that's the other risk, is this credit risk, then at least your liquidity is protected to a large degree. The fund is still fairly liquid in order for you to get your money. So for a money market fund, the biggest risk is interest rate risk going up and down. And then, of course, the risk of that fund or the components of that fund, for example, being invested in one or two of the banks, defaults.
Okay, thanks for that. And I talk a lot about money markets in my book, my courses, in my webinars, where I basically explain to people how they can effectively use it. So I also get the question quite often where people would say that I always used to use a call account or something, but I'm really interested in going into money markets because now I understand more about it. What is the way for somebody who's interested and want to start investing in a money market? How can they start?
Ronel, effectively, it's fairly simple. So most of your investment houses or fund managers, and even the larger banks that have fund managers, have online investment platforms. So if you are online savvy, you can go into the website. Cadiz uses the BCI platform. You can register with them, and there's all the unit trust funds, and there will be a group that will be money market funds, and you can click on that, and you can invest. So it's as simple as that in terms of mechanism. The other alternative is, but then you kind of take that risk on yourself as an individual. The other alternative is to speak to your financial advisor. And I would also strongly encourage this, because a financial advisor will assess your risk profile, and he's got all the mechanisms and contacts and forms and everything you need available for you to be invested. You can do it yourself. There's nothing stopping you. But using a financial advisor gives you that added level of comfort that your risk is being assessed adequately.
Okay, and then in terms of a minimum investment requirement?
Ronel, minimum investments vary from investment house to investment house. Some have no minimum requirements. Others peg it at a couple of $1,000. For example, somewhere as high as 20,000 Rand to get involved in the money market fund. Our particular unit trust fund that we manage, money market fund, has got no minimums at all. You can get in for as little as you want. There obviously may be some cost involved for administering a smaller amounts. There may be an admin fee or two, but it does differ quite widely. And I would encourage all your viewers to just, go and explore and then find out what the difference are in terms of costs and minimum amounts.
Okay, and there are the options that you could either sign a debit order where you kind of contribute on a monthly basis, or you can go through like an initial lump sum and then you leave it. So there are those different options as well.
Absolutely. All unit trust funds or management companies, as they are known, will give you that option of a lump sum. So in other words, you've got 10,000 Rand or 1,000 Rand, I want to put it in, off you go, or link to your bank account a debit order, a monthly debit order, which you will specify. This is the amount that comes off and gets invested every month. Then you will do what is known in the investment circles as Rand cost averaging. So in other words, buy as prices go up or as prices go down on a monthly basis. And on average, you will get a return on your money. There's the whole concept of Rand cost averaging. So it's either lump sum or debit order, or you could add to an existing investment. So let's say, for example, you build a portfolio of unit trust. And I think, okay, today I've got some spare cash. I want to add it to my portfolio A, for example, my unit trust A. You can do that as well. Sell from the individual funds as and when you deem fit. Okay.
You've mentioned now a money market is very liquid, so it's easy to invest and to disinvest. But how long does it typically take? And I'm talking specifically about when you have a separate kind of fund manager that's separate from where you are having your bank account. How long does it usually take from when you have disinvested with your fund manager to get into your bank account?
Ronel, today with technology that's become quite sophisticated, it's normally in the region of 24 hours. But I think most of the unit trust management companies will specify up to 48 hours to either get and process the deposit or to reflect in your bank account. Obviously, depending which bank account the management company, they may be with bank A and you might be with bank B. And we all know when you do transfers between different banks, there might be an extra couple of hours or a day involved. But generally, unit trust funds, you can access your money within 48 hours.
Yeah, and I think that's definitely another benefit, because I mean you just need to take into account that there's maybe that bit of a time delay, but I mean it is almost immediately accessible, especially for things like emergency funds or those kind of needs, or your shorter term cash flow needs when you are a business. And I definitely believe that's another great advantage.
Absolutely. The only thing I do want to mention, Ronel, at this juncture is that we do live in a world of very high regulation. And I think there's definitely good reason for that in terms of this industry being regulated to ensure that it is run along absolutely the highest ethical standards. So whoever invests, just make sure disinvest that you've got your what is known as your FICA requirements all up to date, your ID, your proof of address and all. Maybe for a business that might need one or two extra things as well. And once you get over that hurdle, it's fairly easy to be able to transact.
Absolutely. And then what are the returns that an investor can typically expect from a money market fund?
Okay, and I think this is the the big question, and already see all your viewers getting out their pencils and pens to write the number down. There's no magic number, but money market funds generally aim to give you better than your normal savings or cash accounts. And I think the big difference here is we're talking about returns that you can get just going into the bank it's going to be better than your cash accounts. Some may say, no, but my bank gives me better than the money market account. But yes, have you considered maybe it's a fixed deposit? So you got to leave it there for 12 months before you can get that return. Whereas with the money market fund, everybody gets the same return. So, it's difficult for me to peg a number to it because interest rates change all the time. For example, our Cadiz BCI money market fund delivered over 7% in the last year on a 12-month basis, net basis. But because interest rates have come down, we've had these aggressive rate cuts, it is now yielding around about 4%, just over 4%, which is very commensurate with all the money market funds out there. So, I hope that gives some idea as to what you can expect. We cannot peg it to a specific number, but it's better than your cash or savings accounts.
No, absolutely. I think I often do a lot of research where I go and have a look at which banks or fund managers are having the best performing money markets. And I think that is where Cadiz is quite often right there at the top. But maybe you can just explain to us kind of like, if you are looking for a good performing money market fund, what are the kind of resources out there that you can use to get this kind of information?
Okay. So to help you choose, Ronel, I've also got to state that, past performance is no indicator of future performance. I think we all know that, and all our disclaimers have to have that in by law. And if you come down to money market funds in particular, there's very little to choose between funds in terms of performance. It's very similar. But a couple of pointers to just help you choose a fund. I think the first one is if you know management and they are reputable, that's a tick in the right direction, or you can tick that block. Have a look and see if that house has got a proven track record. Now, unfortunately, you will have to go and do some digging. We've got the internet, everybody's got the website. Go into their websites, have a look and see if they've got a proven track record. So in other words, it will give you some comfort that they are able to deliver what they say. So what the label is on the bottle is actually what's in the bottle. I think that's another thing to look at. Then the other one is, in particular with money market funds, have a look and see how big the fund is, because you'd rather want to be invested in a fund that is sizable enough for your needs. If it's a very small fund and you are 10% of that fund, then your concentration risk within that fund is quite big. So I'm not saying go for the bigger funds, but in relation to what you want to invest, it's got to be something that is easily absorbed into the fund and be able to be taken out when you need it. Then the other thing that you may want to look at when you are considering investing in a good money market fund, and I put good in inverted commas because it's a relative term, the platforms that you have to transact. It mustn't be some mystery that I have to go through 10 layers before I can find out, oh, that's how I invest. It should be fairly easy, either through an online platform, through your financial advisor, through a LISP, or whatever the case may be. Those would be the points.
Okay, great. Thank you for sharing that. And I think then an important question that people always have would be, what are the costs or the fees involved?
Yes, fees, we cannot get away from. Nothing for free in this world. All right. Yeah, look, I think generally money market funds and unit trust funds in particular charge around about an annual admin fee of between 25 and, sorry, let me say this simply, between 0.25% and 0.3% annually. That's kind of generally where the money market funds are lying. There may be, so that's your general annual admin fee that's allowed to be charged on a money market fund. There may be some additional costs. For example, if you're going through a financial advisor, he might charge you a fee for giving you advice, and he's very entitled to do that. If he is a qualified financial planner and he's certified, he's eligible to do that. And they can charge anything from nothing to maybe 1% or 2%, depends. You have to negotiate that with your financial advisor. And then the last charge that may come into effect is if you are investing a relatively small amount, the investment house might say, look, this is quite small, I need an extra resource or two to administer this, I'll charge you £1 or £2 extra a month or whatever the case may be. So I think that's just being very open about the kind of charges. Go and investigate it, go and compare, and to help you make your decisions.
Okay, great. And then I think apart from the costs, there's always the tax implications as well. So maybe share with us the tax implications, and then also having a money market fund as a tax-free savings option.
Yeah, no, absolutely, Ronel. Unfortunately, we cannot get away from taxes. It's the bane of our lives, but tax will always be there. I'm not a tax expert, but money market funds are generally available as part of the tax-free investment vehicles that have been specified. I think you can do a contribution up to 33,000 Rand per year for individuals and 500,000, if I'm not mistaken, for over the life of your investment. So I think money market funds then from a tax sheltered perspective qualifies for that capability. Thereafter, the tax is in the hands of the individual tax or investor, and everybody's tax profile is also different. You know, whether you are a company or a business or an individual with small or huge or big or different size of investments, your income tax is going to be taxable at your tax rate. Now, money market funds do generally generate interest, and as we know, interest is taxable. So your management company will provide you with a nice little tax certificate so that you can use to do your tax returns with, and on there will be specified the interest income that is applicable for that particular investment. But then, of course, as I said, most money market, or generally speaking, money market funds falls within that. You can, if you can mark it as your tax-free contribution towards the 33,000 Rand per month, and you can have that saving. But you know, I would encourage your viewers to speak to their financial advisor who are tax experts or get to taxation. They can structure your tax system for you so that you are most efficient in the way that you pay your tax.
Yes, yeah, I think because there is the interest component, it obviously has like your normal income tax implications, but because you do not have really kind of your unit price being your value doesn't change because of, you know, there's no capital gains or losses within a money market fund. I don't think, well, I'm pretty sure capital gains tax won't be applicable. Is that correct?
Ronel, as I said, I'm not a tax expert, but what I do know is that capital gains tax becomes applicable when you dispose of an item.
Yeah, but I think it is kind of like if it's because of a change in the value of your price, and because that is not value, really, but yeah, absolutely. I think people can just, but I've never had capital gains tax on my money market funds as far as I can remember, but yeah, I think that is something that we can definitely just maybe confirm. But then also, in terms of a money market fund going through your bank, and then also directly through a fund manager, what's really the differences there?
Okay, so banks generally offer what they call money market accounts as opposed to money market funds. They may very well offer you a money market unit trust fund as well. But the big difference here is that your, generally speaking, once again, your money market accounts at the banks require a higher minimum balance than you would have, than you would need to get involved in a money market unit trust fund. Then also at the bank, your money market account invariably will attract interest depending on a sliding scale, depending how much you invest. So if you invest a small amount, you get X interest. If you invest a bigger and bigger amount, your interest then rises accordingly. Whereas in a unit trust, everybody gets the same. interest in the fund. There's no distinction between unit holders. If I get X%, Y gets X% because they are invested in the fund. And I do believe, I stand corrected, but I think some of the banks offer capital guarantees. But if they do, then obviously your interest component will be compromised in some way or other in order to offer you that capital guarantee, whereas a money market unit trust doesn't offer you that at all. But we've discussed earlier where invariably it's a very, very safe environment to invest your money. And then of course costs will differ wildly depending on the type of product you're involved in the bank, or even between unit trusts you may have a bit of cost differentiation as well. So just those are the sort of major differences between going into a bank and say put me in your money market account versus investing it in a unit trust fund. Yeah.
Okay, and then we have touched on it where you said that if somebody is not feeling comfortable, they can obviously ask their financial planner or advisor to assist them, but it is because it's not a complicated investment as such, people can invest directly. They don't need to go through a financial advisor if they feel comfortable with their decisions. That is correct, eh?
Absolutely, Ronel. I think most investment offer you that capability, and especially now that things are so digitally or electronically sophisticated, I think you can access their platforms and our platforms quite easily to effect your investment.
Okay, then Sidney, I think I want to end off asking you a last question. Being one of, I would say, like the portfolio managers of one of the best performing money market funds in the country, what would you say to people out there to encourage them? Why would they want to invest in a money market fund?
Now, I think any investment is better than no investment at all. I think that's number one. Number two is that if you are uncertain in any way as to where you should be investing, money market funds offer you a great opportunity to provide a safe haven platform where you can keep your money while you're making your decision. I think also as a building block of your investment portfolio, I do not advocate putting all your money in a money market fund. Everyone's risk profile is different, everyone's investor profile is different, but as a building block of your investments, I personally have it as one of my building blocks in my investments, whether I'm saving for a holiday next year or for my kids' education or even for retirement. You know, there are excellent retirement savings vehicles which you can use, which are also tax sheltered to help you with your investments. So yeah, I think, and then the third and the last thing that I would say is there's great liquidity in money market funds. When you need your money, and they all comes, the rainy day does come, we all know about those rainy days, it's easily accessible.
Yeah, absolutely. Sidney, I think it is, and I think that is exactly why we have you today, sharing your knowledge. It's all about educating yourself about what are the options out there, what's the benefit, what are the things that I need to look out for, in what kind of circumstances should I use what kind of investment, and also for everybody's different kind of risk profile. They are at different stages in their lives, and you need to kind of educate yourself and make sure that you are using the correct vehicles out there for whatever your financial goals might be. So Sidney, I really want to thank you for joining us today. Thank you for spending time and just sharing some of your wisdom. It is so valuable for the viewers out there to understand more about what's really happening. So I want to thank all of you as well for watching this. I hope you have received some good value. I am going to share the details of Cadiz in the description, then you can get in contact with them, and then also remember, subscribe to the channel and click on the link below if you want to enter the competition to win one of my books, Financially Fit and Wealthy. So thank you so much, and I'm looking forward to spend more time with you on the next Ronel Talks Money Show.